Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. I'm Prashant. With me, my colleague Surabhi and Nigel. Guys, good morning.
Hi, morning.
Hi, morning, folks. Well, it seems the US government is finally going to get back to work. So that's good news coming through. And I guess here, I mean, the bulls have been in a better mood right from yesterday. So let's see what those final numbers that tally from Bihar says and whether they can continue.
Well, that's right. That Bihar final tally is going to be important. Good to see that that shutdown has ended in the United States, so it didn't have any big impact on the equity markets. And all eyes on whether in the next few days Mr. Trump is going to make that phone call and go ahead and lower tariffs. I think those are the big triggers for the remainder of November. But result season almost ended. Breathing a sigh of relief.
Okay, well, it gets a little easier, but not for long, right? Because it's like a rolling earnings calendar. So third quarter is not very far away. I mean, 30 days to go for the end of the year. And then, you know, within the first 10 days of January, you start getting the third quarter numbers. That is October and December. Okay, let's take it from the top in terms of what you need to know. So US equities were mixed, not very much by way of change. S&P actually was unchanged, slightly higher. Nasdaq was down about 0.25%. The US House of Representatives voted to end the government shutdown. And that is the big story. So markets last night were looking forward to the House voting to end the government shutdown. And it has happened now, post, of course, US market close. That is positive. I mean, you know, of course, you can argue the fact that it's not really hurt. The shutdown's not hurt markets, not at all. So will it really help at the margin? It'll help with data. For example, the White House yesterday had said that, the October jobs data will not be released, which, I mean, next week we'll get the September jobs data, the monthly jobs data in the US. But the October, we were supposed to get, the October number was supposed to come after that. So maybe now the first set of NFP perhaps will be in December, 5th of December. So this data gap, data vacuum, I think, is hurting decision making, and people have started talking about it. Mag 7 stocks, the large IT stocks in the US, that yet last night underperformed the Nasdaq and the broader market as well. Maybe a little bit of rotation more than anything else. Just consider this: for the if you look at Nvidia, the poster boy of this big AI rally, and Nasdaq, last night was only the fourth time this year, that is 2025, that Nvidia was down 2% and the Nasdaq actually, the S&P 500 was higher. I mean, higher by anything, was in the green basically. So, and that's essentially how strong the push has been from Mag 7 and, of course, Nvidia in particular for markets to have done well. AMD was the other one, right? 7.5% higher, and there was that sort of analyst conference. The CEO of AMD expects 35% revenue CAGR over the next 3 to 5 years. And this is all, of course, on the back of AI spends into AI infrastructure. Cisco was up 4% after hours following its quarterly earnings report. 10-year yield, macro markets down 5 basis points to about 4%, 4.07. Oil prices down 3.8%, 4%, 62.68 on Brent. I saw this one headline, OPEC saying that 2026 supply is going to match demand. But that's a meaningful slide as far as oil is concerned. Now, just one bit on the Bihar exit polls. Access My India, which is a credible polling agency, they conduct exit polls and they've got it right in the past. Their poll came last evening, and their poll actually shows that it's a much closer contest in Bihar as compared to what some of the others showed. So just look at this. The Access My India poll projects NDA winning 121 to 141 seats. I think 120 basically is the halfway mark, as compared to 133 to 160, which was basically what other exit polls were projecting, which was kind of a clean sweep. I was making this point yesterday that exit polls in Bihar, at least the last two elections, they've been tricky, to say the least. 2020, 2015 as well. 2015 was a complete, dramatically opposite set of actual results. So, I think markets will take note. We've had a bit of a run-up yesterday, of course, included as well. So we'll have to, the final results in that sense still matter because they are tomorrow. And there's this new poll, a credible pollster who's thrown in their numbers. I'll just tie in the levels. Nifty target 26,100. We crossed 25,800 yesterday. Support is the 20-day moving average, which is moved up to about 25,711. And the 40-day exponential moving average, which is 25,444. Bank Nifty near-term target is 58,300. And support stands at 57,821, which is the 20-day moving average. I mean, if you're trading, if you're investing, it doesn't matter day to day. I mean, you get a bit of a knee jerk, etc. But if you're trading, and you got this, today's Thursday, tomorrow is the Bihar final results, and numbers will start coming in early. You want to go light on longs in that sense, right? I mean, purely if you're trading and not go in heavy, because you just want those numbers in the bag. And then, one can go ahead and take those positions what you want. So I think some of that will play out into today's session. And I think that's only sensible because it's in the very near term, doesn't matter beyond a few days, but in the near term it will matter because of the run-up that we've had in the very, very recent past. GIFT Nifty tells you that we start about 35 points lower. Nigel is now standing by with the F&O stats and positioning is looking like. Nigel, over to you.
Well, take that point, Prashant. The Bihar election result, in all probability, going by what the polls suggest, the market has factored in that the BJP will come in with a thumping majority. If that isn't the case, then in fact it'll be a bit of a surprise. But otherwise, that data point seems to be more or less digested. The other factor is going to be the India-US trade deal, and all eyes will be whether or not we could hear something from Mr. Trump in the next few days or so. What about in yesterday's trading session? The FIs, they continue to remain sellers, but they sold relatively less. However, the markets did well. And for the markets on the whole, both the Nifty ended higher, the Nifty Bank as well ended higher, and the open interest on both of them was lower. So it's telling you for the markets on the whole, there was a bit of a short covering bounce that did play out. The FIs, they took a shorting break yesterday because they didn't add any big short positioning, in fact. Just around 825 contracts. They continue to remain aggressively net short with close to 88% of their positions on the short side. And if you look at it in absolute terms as well, at around 1.6 lakh contracts on the short side, this market is still heavily short, and that's something you like. If in case we do get good news, then you have that, that trigger to push us higher. While the clients, they are net long, close to around 1 lakh contracts on the long side or thereabouts. Moving to what the FIs did in the stock futures, well, in yesterday's trading session, there was some covering that we saw on stock futures, and there was some long addition. So swing factor there of close to around 35,000 contracts. What's heartening to see is in the last few trading sessions, the FIs have gradually started writing more puts. And that was on display even yesterday. 70,000 contracts were written in yesterday's trade on the put side, which was much higher than the number of calls that were written. And that's why the PCR has gradually moved up. It's moved to close to around 1.23 as per the last check. Remember, it starts getting, getting to the upper end at around 1.6. So we're a distance away from that particular level. Two strikes come up for you on the screen. 25,900 call, good amount of open risk build up. And on the downside, the 25,800 put as well. Fair bit of open risk build up is what we saw on both these two strikes. Now, punching in the levels, going by the options data, well, on the upside, the 26,000, 26,050, that becomes like a bit of a resistance zone going by the options data. While the 20 DMA becomes your first reference point on the downside. Just going by the setup and going by the cues that you have, maybe in fact in the second half of November or maybe in this month itself, if you get a favorable verdict coming in from Bihar as well as a US trade deal, probably fresh all-time highs are on the cards. For that to happen, though, you'll have the Nifty Bank that needs to perform. And yesterday's high becomes a bit of a resistance. It's been making higher highs, to be fair, but that 58,500 becomes important, and the 20 DMA becomes a reference point on the downside. The sector that we'll be looking at could be the NBFCs, because going by the CPI print, it's very, very mellow, and in all probability, you're going to get another rate cut. If that happens, NBFC stocks will be in focus, and the result of the day could probably be Honasa, because those numbers look good, margins expanded as well, so we'll have to keep an eye out. The stock is a considerable distance away from the all-time highs that we saw earlier. So that's the result of the day. I'll track.
Okay, all right, so lots of earnings as we get ready to wind up the season. They will be in focus. By the way, Asian markets are quite a mixed shade, so it's not, all going in one direction. Some of the markets like Hong Kong, lower, Japan, also only very marginal gains actually in Japan now, 0.1%, 0.2%. By the way, SoftBank shares today fell another 5%. So that disappointment over them completely selling out, cashing out of NVIDIA, that's not entirely gone away. Again, about 5% lower. Along with all of these cues, let's remember the other good cue and the big cue is inflation, which obviously has cooled off substantially. Just a 0.25% increase in CPI inflation in October. And we'll talk more about that as we go forward.